All right, guys, welcome to today's awesome meeting. Welcome to today's awesome class, right? So, today we're going to be talking about something very, very important, right? Something very important in the forex market. This is a strategy that I've been using. This is something that is also for traders worldwide, right? So, before we go ahead, if today is your first time joining this channel, do well to subscribe, like, and share, right? Share to your friends, those of them related to you, in order to make and benefit from everything happening in this channel. You are not late, right? It's never late, right? To make from everything happening, especially for the daily analysis and everything happening in the channel, right? So, what are we talking about today? We are talking about the cup and handle pattern, right? The cup and handle pattern. I believe you know about your head and shoulder pattern, your double top, your W pattern, your different types of patterns in the forex market, right? The different chart patterns, right? So cup and handle pattern is also a chart pattern in the forex market, right? That is very, very sustainable and very, very good, right? It's not that common, but whenever it's spotted, oh my goodness, it plays out 90% of the time. It works, right? This is a strategy that I use and that works very, very well in the forex market, right? So let's go ahead, right? And this cup and handle pattern, it can be spotted either in favor of the trend, right, or at the exhaustion of a hand trending market. Let's quickly go to the two types of um, copper handle patterns, the two types. We have the main copper handle pattern and we have the inverse copper handle pattern. I come again, we have the copper handle pattern and we have the inverse copper handle pattern, right? So this is how the copper handle pattern looks like. Now, this is how it is. It can either be in an uptrending mark. It's a continuation pattern, right? It's a continuation pattern. It's not a reversal pattern, right? So, for it to be a continuation pattern, it must be found in favor of an uptrend, right? While the inverse or the inverted cup and handle pattern is found in a downtrend, right? The market must be trending down. It can also be found at a resistance zone, while the cup and handle pattern can be found at a support zone, right? In the exhaustion of a down trending market, right? So the market must be trending upward or just started trending upward. You see the market making this move, then at the end of the day made this type of move, made this type of curve in the forex market, making this type of curve. So getting to this resistance, try breaking it, but no way, coming to form the handle. Just have a mental picture of your handle. Now, at the end of the day, finally breaking it. Whenever it's spotted, don't even think of selling the market or don't even think of shorting the market. Only think of buying the market. I'm going to show us how to buy it, right? And I'm going to show us how it looks like on the chart. But whenever it's spotted, it's a good buy and buy, right? So the direct opposite of this copper handle pattern is simply known as the inverse or the inverted copper handle pattern, right? It's usually in a downtrending market or at the resistance zone. But the most important thing is that it's a continuation pattern and is found in favor of the trend, right? Whenever it's spotted, 90% of the time it plays out, it works very well. All you have to do is to wait for the formation. Allow the formation to be done just like this. Allow the formation to be done, then making this type of movement, then you can now enter for a sell after having a confirmation, right? I will show you how to enter or to take entry for either your buy or for your sell in the forex market, right? So that is it. They are both continuation patterns. You must allow it to form, right? So before going to the chart to spot or to show you how it looks like on the chart, it must not be perfect the way you are seeing it on my slide, right? It must not be perfect, but whenever it's spotted, oh my goodness, it plays out and it works very well, right? So let's go there, right? So this is the chart. Um, this is the chart. So okay, it's not that common, but whenever it's spotted, it works very well. So let's see to this one that is on this particular place right now. So let me quickly get to using the shape, right? So we can now get this. So let's take this as our cup. This is how it looks like, right? So let me use the circle as um, right. So we take this, right? So let's fill this up. Let's fill it up, right? So let's fill it up, right? So the same, just have a mental picture of a cup and the handle in your hands, right? Just have a mental picture of a cup and the handle with you, right? So this is how it looks like, a cup here and the handle, right? So whenever it's spotted, it's a very good buy, a very good buy, right? It's not that common, so don't expect to see it every time. But whenever it's spotted, it works, right? You can see what is happening here, right? You can see what is happening here. This a market, this is the current market happening right now. This euro United States dollars, and you see subsequently EU will continue the buy, right? It's a continuation pattern for a buy. You see subsequently euro USD will continue for a buy. Better still, we just go for a little retracement in the forex market before going for a buy. This is a killer strategy, I must tell you. This is a killer strategy in the forex market. There are some persons that do not trade except they see this, right? So let's go ahead with what we have. So two ways to trade it. So how do we trade it? Whenever you spot a cup and handle patterns, how do you trade it? There are only two ways you can trade it, right? By the time you get to your chart, there are only two ways you can trade this. Number one, using the breakout, right? The breakout, right? So just when you after mapping out your zones, after mapping out your zones, just wait for the candlestick that is gonna break it, breaking it above and closing above. You can go in for a buy without even waiting for the market to make a retracement, right? Immediately the market breaks to the upside, a break above, you can go for a buy, right? A good break above, a good candlestick breaking above, right? You can go for a buy, right? A good candlestick just like this one trying to break it. Better still wait for a confirmation with this, right? A good break above or with this, right? Closing above, a perfect close. Or either with a wick but breaking above, you can go for your buy in the market, right? Another way you can also trade it is this, and that's the conservative way. Allow the market to break, right? If it's gonna happen with this, so allow the market to break. If you use this, right? When you're using this, you allow the market to break, allow it to make a retracement, right? Back to the place it was coming from, a break and the retracement, right? Giving you a candlestick confirmation, giving you a candlestick confirmation, then you can now go for your buy in the market. But you must make a break, coming back, giving you a candlestick confirmation before you now go for your buy in the forex market. This is a very sweet strategy in the forex market, a very sweet strategy in the forex market. I know some persons will be like, oh, what about um, the other type? Are there other ways you can take entry in the market? There are still other ways, right? But the two major ways is the breakout, a breakout and a close, you quickly enter, which is aggressive entry. Then a retracement, having a retracement conservatively, you can take entry in the market. And that same way you approach the inverse or the inverted head and shoulder in the forex market. The inverse or the inverted head and shoulder, that's the same way you approach it in the forex market. So that's how it looks like. So as a way of recap, remember, if you're enjoying the video, do well to subscribe, like, share to those of them close to you, your friends, for them to also benefit from the good things happening in the channel, right? So we started with the head and cup and handle pattern, right? The cup and the handle pattern. There are only two types. We have the cup and handle pattern and the inverse cup and handle pattern. Both of them are continuation pattern. They can be found along the trend or for the cup and handle pattern along the trend or at the exhaustion of a high trending market, but they are both for a buy, right? Inverse cup and handle at a resistance or in favor of the already in the direction of the high trending market can now go for your sell in the market, right? So this is a good example here. Top and handle. This how it looks. Remember, it must not be perfect, right? This how it looks like, just like this too. Remember, it must not be perfect. It mustn't be perfect, but at the end of the day, the market will definitely head to your direction, right? So this also, just like this also, you can now go for your sell, right? Now look at this for sell, right? The only two ways to trade it, the breakout strategy, right? Allow the market to break out. When it breaks out, after breaking to the upside or to the downside, you quickly take entry for either a buy or for a sell. Or after the breakout, you quickly wait for a retracement. At the end of the retracement, you can go in for either your buy or your sell in the forex market. So thank you very much for joining us today. Do well to enjoy yourself, enjoy your trades. More pips to you, right? So thank you very much. Bye now.